G'day everyone, welcome back to Pete's Investing. Today's May 11, 2023. This is the Nat Gas price update. We've got our three charts here. This first chart is the weekly chart, which we look at is the main trend indicator that tells us to go long or short on the hourly. On the daily, we look at support resistance lines. And then on the hourly, as I said, that's our suggested, or not suggested, but one idea in terms of trading you can use. And I've got a back test up here we'll refer to as well. Let's look at the weekly first off. So again, what we're doing here is combining the triple moving average of the price chart with the CCI 150 moving averages, and that tells us if they're both aligned, we're going short. If they're going in a bearish momentum, or if they're going bullish, we go long, such as that period. Where they're flat, such as that period there and that period there, that means it's undecided because one of the two indicators is not matching up with the other one. And what we've got here is a triple moving average 3, 5 and 60 of the price chart, and the moving average 5 and 50 of the CCI 150. So basically at the moment we're in a bearish momentum primarily, so that's where we look at taking bearish trades only. On the daily chart, that's given us the same indicator down there, so that's also showing a neutral positioning, and I'll explain why that's the case in a minute. But first off, I'll just show you the support at 2064 and resistance at 3050, and also this Fibonacci between that high and that low. The price did bounce off that just below the 23% Fibonacci, causing that key resistance area. Now it's also fluctuating down and bouncing in this minor resistance at 2504. So I've also got this diagonal, this dark line here, this diagonal line, and if I zoom out, you see that's been drawn along those bottoms as well, historically back to 2020. So it's currently bouncing off that diagonal and also that minor resistance. So we need to see it break to the upside or below that to be more positive about going long or short. Now, why is this showing a neutral stance? Because on the price chart, we've got this bearish divergence on the of the price, and I've drawn that dotted line. So that's a bearish divergence versus a bullish divergence on the CCI. Now when this happens, generally, not always, but generally, the price, for this to work, we should see the price break to the upside and very likely break above this key resistance for this to work. Now if this fails, we'll see the price collapse below this support area, and we should also likewise see the CCI collapse and break to the downside. So at the moment, hold off, because it's been fluctuating in that range for a couple of months now, actually probably more than 3 months. So we need to see it break this divergence one way or the other to be more positive. So avoid going long or short if you're not in the trades. On the hourly, again as a trading idea, first of all, let's look at the support resistance lines. You can see that key resistance and that key support I mentioned on the daily, but also these minor diagonal lines. You'll notice that this descending line, it's bounced off that since our last video and now bouncing towards the downside, in line with this ascending diagonal line. So it may well gravitate between these two diagonals and form a wedge in the coming days possibly. So again, we need to see it break one way or the other to confirm on the higher time frame on the daily to confirm that divergence. Also what I've got here, I'll zoom out. I've run a back test here, and it's basically using the same logic as I mentioned, using the moving averages on the higher time frame. So this is running through the whole time period since back here, since September 21. It's running through the whole period. In other words, I'm not stop trading or stop adding to the positions. Each one of these bars represents one single entry or one contract or number of contracts entered. That's a single entry and exit of a trade. You can see there the profitability, and where it's stepping, like in this position and also those trades, it entered 2 lots of contracts. So that's the average down approach. So again, this is running through the whole time period on the hourly, but what I'm suggesting you do is, if you look back here on the weekly, you can see there is no bullish. Again, this is running a long bullish program. I haven't applied the bearish program to it, but the same logic applies. So you can see there's no bullish or long periods to be added since that period back there, since the peak of that on the weekly, and that corresponds with that period there. So if we applied that from that period onwards, you would not have entered a long position from that period according to the weekly trend, which means up until today, you would have none of these trades would have occurred had you followed the weekly trend. So in other words, only these periods would have happened primarily. So again, just as a trading idea, that's one idea. And again, I use the fractal breakout along with the moving averages as a trading idea. To understand that and get further other trading ideas, reference my Patreon page for exclusive access to weekly stock scans with the average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.